In today's fast-paced world, trends seem to dictate everything from the clothes we wear to the gadgets we buy and even the investments we make. It's easy to get caught up in the latest fads, thinking they hold the key to success or the next big break. Yet if you look closely at those who have accumulated significant wealth, you'll notice something curious. Most millionaires don't follow trends. They might observe them, study them, or even capitalize on them, but they rarely allow trends to dictate their actions or investments. Why is that? This question strikes at the heart of what sets successful people apart from the crowd. It challenges the conventional wisdom that says you need to be ahead of the curve, always chasing the next big thing to achieve financial success. But the truth is, the path to becoming a millionaire often requires going against the grain, thinking independently, and most importantly, having the discipline to stay the course even when the world is rushing in a different direction. Today, we'll explore why most millionaires don't follow trends, drawing insights from successful individuals, financial experts, and well-known investors. By the end, you'll understand why the wealthy prefer to set their own course rather than be swept away by the latest craze. But what is the nature of trends? Trends are by nature transient. They rise quickly, often capturing the public's imagination, but they just as quickly fade away, leaving only those who got out at the right time with any real gains. In the world of fashion, technology, or even social media, trends can be fleeting. What's hot today might be forgotten tomorrow. This ephemeral quality of trends makes them appealing to the masses but risky for those looking to build long-term wealth. Warren Buffett, one of the wealthiest and most successful investors of all time, famously said, "Be fearful when others are greedy and greedy when others are fearful." Buffett's approach highlights the pitfalls of following trends. When everyone is rushing to invest in the latest hot stock, bubble, or industry, the market often becomes overinflated and prices soar beyond reasonable valuations. At this point, the trend is no longer an opportunity but a trap. Most millionaires understand that trends are like waves. They can lift you up, but they can also crash down on you. They know that while trends can offer short-term gains, they rarely provide the foundation needed for sustainable long-term wealth. This is why they avoid the temptation to chase after every new trend and instead focus on what's proven, reliable, and likely to endure over time. So, what is the importance of independent thinking? Another key reason why most millionaires don't follow trends is their commitment to independent thinking. Rather than being swayed by what everyone else is doing, successful people tend to think critically and make decisions based on their own analysis and experience. This trait is crucial for building wealth, as it allows them to spot opportunities that others might miss and avoid the pitfalls of groupthink. Steve Jobs, the co-founder of Apple, once said, "Your time is limited, so don't waste it living someone else's life. Don't be trapped by dogma, which is living with the results of other people's thinking." Jobs' words emphasize the importance of charting your own path rather than following the crowd. This approach not only leads to innovation and success, but also protects against the dangers of trend chasing. By thinking independently, millionaires often find themselves ahead of the curve, not because they're following trends, but because they're identifying and acting on underlying opportunities that trends might temporarily spotlight. They understand that trends are often the surface manifestation of deeper, more enduring changes, and it's these fundamental shifts that they focus on. But why do I need patience and long-term perspective? Building wealth is a marathon, not a sprint. Most millionaires understand this better than anyone. They know that accumulating wealth requires patience, discipline, and a long-term perspective. Trends, on the other hand, often appeal to the desire for quick wins and immediate gratification. This short-term mindset is incompatible with the principles of sustainable wealth building. The famed investor Peter Lynch once advised, "You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready. You won't do well in the markets." Lynch's point underscores the importance of staying the course even when the market, or the world at large, is fixated on the latest trend. Millionaires recognize that markets move in cycles, and they prepare for the downturns by focusing on solid investments that will perform well over time regardless of current trends. Instead of being distracted by the latest fads, successful people invest in what what they know, understand, and believe will stand the test of time. They buy assets that generate consistent returns, like real estate, blue chip stocks, or businesses with strong fundamentals. By maintaining a long-term perspective, they ensure that their wealth grows steadily without the wild fluctuations that often accompany trend following. And so, what is value investing versus trend investing? The investment strategies of value investing and trend investing offer a clear contrast between the approaches of most millionaires and the broader market. Value investing, championed by Warren Buffett and his mentor Benjamin Graham, involves buying undervalued assets that have strong potential for long-term growth. It's a strategy based on careful analysis, patience, and a focus on intrinsic value rather than market hype. In contrast, trend investing or momentum investing focuses on buying assets that are currently popular with the hope that their prices will continue to rise in the short term. While this strategy can generate quick profits, it's also much riskier and more prone to sudden losses when trends reverse. Most millionaires lean towards value investing because it aligns with their philosophy of wealth building. They understand that true wealth is created by owning valuable assets, not by speculating on short-term price movements. This disciplined approach to investing is one of the reasons why they don't follow trends. They know that chasing after the latest hot stock or market craze often leads to poor decisions and financial losses. So what are the dangers of herd mentality? One of the biggest risks of following trends is falling prey to the herd mentality. When everyone around you is rushing to buy a particular stock, cryptocurrency, or piece of real estate, it's easy to get swept up in the excitement and fear of missing out. However, this herd behavior often leads to bubbles where asset prices are driven up to unsustainable levels before eventually crashing down. The dot-com bubble of the late 1990s and the housing bubble of the mid-2000s are prime examples of what can happen when people follow trends without regard to underlying value. In both cases, millions of investors lost substantial amounts of money because they followed the crowd rather than doing their own due diligence. Most millionaires avoid this trap by remaining calm and rational even when the market is frenzied. They understand that following the herd can lead to financial disaster and that the best opportunities often lie in the places where others aren't looking. This contrarian approach is a key reason why they don't follow trends. They prefer to find value where others see none, rather than jumping on the bandwagon. But how does the influence of financial education play a role? Another reason why millionaires don't follow trends is their commitment to financial education. Many wealthy individuals invest considerable time and resources into understanding markets, economics, and finance. This deep knowledge allows them to make informed decisions and avoid the pitfalls that come with trend chasing. Robert Kiyosaki, author of the best-selling book Rich Dad, Poor Dad, frequently emphasizes the importance of financial education. He argues that understanding how money works is crucial for building and preserving wealth. Kiyosaki writes, "The lack of money is the root of all evil," but he also suggests that the lack of financial education is a key reason why so many people struggle financially. Millionaires don't just have money, they have the knowledge and skills to manage and grow it effectively. This commitment to financial education gives wealthy individuals the confidence to resist trends that don't align with their long-term goals. They understand the difference between speculation and investment, and they're not swayed by the latest fads or market hysteria. Instead, they focus on sound principles and strategies that have stood the test of time. So, why do most millionaires resist following trends after all? It's because they understand that true wealth comes from independent thinking, patience, and a deep commitment to long-term goals. They know that trends are fleeting, often driven by emotion and hype rather than substance. By focusing on what truly matters, value, knowledge, and disciplined decision-making, they build wealth that lasts. In the end, most millionaires don't follow trends because they don't need to. They've learned that success isn't about chasing the latest craze, but about setting their own course, guided by principles that have proven effective over time. As Steve Jobs once said, innovation distinguishes between a leader and a follower. Most millionaires choose to lead by charting their own path rather than following the crowd. By understanding this approach, you too can start thinking like a millionaire. Resist the temptation to follow trends and instead focus on building a solid foundation for your financial future. The journey to wealth isn't about quick wins, but about steady, consistent progress guided by sound principles and independent thought.